Good morning and welcome to our MRTA web educational series. My name is John Green with Association Member Benefits Advisors. I'm joined by my co-host today, Kyle McCoy. I'll let him introduce himself here in a little bit. Just a couple of housekeeping details before we get started. Again, we welcome you to our Basis of Long-Term Care conversation today. All participants are in a listen-only mode, and what that means is that we can't hear you. You can't see each other, but if you have questions, please put that in the Q&A feature in the chat in your reaction bar. Kyle and I can monitor those questions to come through here. And if you have something that's specific to you, we'll probably get back to you individually. Or if it's a question that everybody can benefit from hearing, we'll stop, we'll share that question, and then we'll move forward in the conversation. Some we may hold later because we're going to touch on that, but we love to have interaction. We love to have your questions here. And especially in this webinar, we get a lot of individuals who ask questions, and that's great. So we want to make sure that you've got every question answered for you before we close today. You'll also notice this QR code down here in the right-hand corner of your screen. Throughout the presentation today, have your smartphone handy and open up your camera feature, and you can hit that QR code up like we do with menus in restaurants today, and you can find out a little bit more about some of the conversation, the topics we're talking about today, and get more in-depth response back to you as well. We do record every one of these sessions, and we had several folks that emailed me this week and said, hey, I won't be able to make it. Can you record this? We record every one of these sessions. We put them out on the MRTA website. Under the benefits section, you'll see an MRTA educational webinar series link. It is a whole page of not only upcoming webinars and how to register, but back webinars that we've had, all the recordings and things like that. So it's a great way to get the information that you may have missed or you want to share it with a family member. So grab a pen and paper today because we're going to give you some numbers. I'm going to give you some things to think about. May throw a pop quiz at you, that kind of thing as well. And so let's get rolling here and talk a little bit about what's going on at MRTA first and foremost. We've got coming up the Unit President Summit on March 14th and 15th there in Columbia. I want to give a shout out to the over 200 members of MRTA who went to the day at the Capitol back last week on Valentine's Day. And if you're one of those that went, we appreciate that. This is a picture here from the Central Missouri group that went from District 7 and had a great day there. From what I understand, there's lots of activity buzzing around the Capitol, protecting not only your pension and potential cost of living adjustments, things like that, but also working to protect public education, which also gives members to MRTA and supporting our schools as well. So if you need to find out the latest on legislative activities, please text MRTA. So just text the word MRTA to 52886. MRTA to 52886. And what that will do is they will send you a text alert when we need you to call a legislator or write a legislator, or maybe somebody that was one of your students at one time. This is an excellent opportunity. And MRTA doesn't use this frequently, but just know that when they do, it's something they need you to act on. So I encourage you to find out that, especially with the legislative session going on right now and issues facing public education as well as retirees. Real briefly, my name is John Green. I live a little bit north of Houston with my wife, who's a second grade teacher. My kids, who are in various stages of adulthood or student teaching, had a son that graduated from Mizzou, did his grad work up there. But I've spent the better part of my career in classrooms helping educators understand what their retirement years look like. And so I appreciate the opportunity to kind of share with you some of these conversations that we're having today and this educational stuff as well. And I am blessed to be joined by one of our best representatives up there in the state of Missouri. That is Kyle McCoy. And Kyle's been with us for a couple of years. I know if you're familiar with him out on the western part of the state, Kyle has been to many of your unit meetings and chapter meetings all across the state. So Kyle, why don't you introduce yourself to us and tell us a little bit about you?
Yeah, grew up in Lebanon, Missouri. So if anyone's been there, I apologize. People's cars tend to break down here. I have no idea why, but it's just what I've heard over the years of talking to people. They come here to go fishing and then their cars break down. So if that happens, don't call me. I'm not a mechanic. I don't know how to fix cars. But yeah, there's a couple of pictures of me up there. The one on the left-hand side is just my family at a pumpkin patch. It's my brother and his wife and his nephew. My nephew wanted me to go because I'm his fun uncle. And that was my first experience at a pumpkin patch as an adult. I'm going to be honest, it was pretty boring. There wasn't a whole lot to do. But the middle picture is just myself whenever I served in the Marine Corps. I decided not to renew my contract. I did 6 years with them because I enjoyed sleeping, and I didn't like being told I had to run every day and shave my face. So a little bit about me.
Thanks, Kyle. I appreciate first of all, foremost your service, but also appreciate your service to the retirees of Missouri. And I'm going to have Kyle jump in a couple of times throughout our conversation and share with you some of his experiences with MRTA members and questions that they ask about this specific topic here. But before we get rolling, just a quick reminder, MRTA, especially around this legislative season, always fighting for your pension. You've worked all your career for it. It's your most valuable financial asset. It's a pension system that you can never outlive. But there are forces outside that want to take that away. They want to convert it to some type of a cash balance system or a 401k type program. MRTA is fighting for that, to preserve the benefits that you earned when you left the schoolhouse, keeping you connected to local community members, you know, in your chapters and your units all across the state, and then offering you extra discounts, fun stuff, benefits, and things along the way as part of your membership. And some of those benefits come through AMBA. And there's some benefits of having AMBA and MRTA as a partner together for the past several years. One, we can fill those gaps that were not covered by your benefits either from the state or from the district whenever you left there. They're portable if you leave the state. We have a lot of members of MRTA who have moved closer to grandkids, moved a little bit further south. You can take these benefits with you because they're not tied to a network. But one of the biggest things, and especially in our topic we talk about today, you can extend your benefits from MRTA to family members who are not eligible. Think about your parents, or maybe think about your adult children who have aged out of maybe your benefits. So this allows you to have benefits across the board. And in this particular subject, I'm going to kind of show you how and why this may make sense to you from your parents or your adult children. Because we're going to talk about this concept of long-term care, elder care, and how it fits all together in the picture as we age and take care of our financial responsibilities. So we're going to kind of discuss the myths and facts surrounding long-term care. We're going to give you some stats and some numbers talking about who needs long-term care. And we're going to talk a little bit more here in a week or two about long-term care 2.0 or 201. We talk a little bit more in depth on those things. We're going to show you what the traditional components of a long-term care policy are, because there are several of you on this call today that probably have a long-term care plan, but don't know what's inside of it, what's it made up of. So you can understand the components and how they work together. We're going to talk about the cost of care, what's currently going on in the nation, as well as specifically in Missouri, how much it costs, and the cost of waiting, and maybe some potential solutions as well. Kyle and I talk quite frequently, and he says that many Missouri teachers, retired teachers that he takes care of, he hears from some others that say, maybe I should wait. I really don't know what I should do just yet. I highly encourage you to pay attention to some of our later slides where we talk about the cost of waiting and how you can make the most of your endorsed options. But to help Kyle and I understand who's on the call today, I want to launch a quick poll. And I want you to tell us, are you prepared? Do you have some sort of a long-term care plan in place? Yes or no, or not sure. If you'll hit that up on the bar there, we've got folks already answering that question. This will help Kyle and I kind of guide our conversation today and be able to address the group appropriately as we go forward there. So we're about halfway to the group there that's participated. And it's okay if you're not sure if you have a plan or not. That's the benefit of having AMBA and MRTA together. We, as a partner of MRTA, have the responsibility to cover with you what your benefits are, how they work with what you got from the state or from your school district, and make sure that you have peace of mind that you've got everything taken care of that you need here. So we'll leave it open for just a couple more seconds. Give it a last call at 3, 2, 1. Let's end this poll. I'll share the results here. Okay, so we've got an interesting mix here, Kyle. We've got about a little over a third, close to 40% of the group does have some sort of a plan. And I think that's great. I applaud you for that. About a little over half of you don't have a plan. And then there's 1 or 2 of you that aren't sure, and that's okay. That's why we have these webinar series, to be educational in nature, to help you understand what you have, why it's important to have what you have or what you don't have, and then what you can do to solve that if that's an issue for you. This is the reason why I have this webinar. This is why I'm so passionate about it. This is a photo of my father and I back in July of 2020, right after his 80th birthday. He was in a memory care facility in Austin, Texas. He had spent 2 years in a nursing home, and his dementia started getting progressively worse. We moved him a little bit closer to my stepmother in a memory care facility, but this was the last time that he remembered who I was. And so he passed away about 4 months after that, all related from the effects of vascular dementia. But because of what he did back when he was in his early 60s to take care of his long-term care needs, it set and kept our family on a different trajectory than we've seen other families. And so it wasn't just his care that he was provided for, it was able to provide care for and keep my stepmother in the standard of living that she had, as well as my brother and I to be able to provide for our children and their college expenses, things like that. Again, because of what my father took steps many, many years before he ever thought he would need it. Never thought he would. He was an all-state basketball, football, and track runner in the state of Texas, ran track at the University of Oklahoma, played basketball competitively well into his 60s, and never thought this would impact him. And so this is why I'm passionate about it. This is why I share it, why Kyle and I share with you. I want you to see how it impacted my family and my father. And as we go through this conversation today, I'll kind of sprinkle in some experiences that I had so that give you a little color around what's going on. Because it really is about protecting your future. It's not only you and your care that you receive, which is very important, but it is how your family takes care of you. The fact that my stepmother was able to still maintain her job, maintain her place of residence, and the living standard which she was grown accustomed to, that my brother and I did not have to take the kids' college money to provide for my father. Those things have generational impacts. And this is all about what this conversation about long-term care is about. But there's nothing more that Kyle and I love to do than give a pop quiz to a bunch of retired educators. So I want you to grab a pen and paper, number it 1 to 6, and write down true or false to these statements: that long-term care and long-term disability are the same thing. Very few people ever need any type of extended care in their lifetime. And really, it's only people over 50 that need care. And true or false, nursing home confinement is the only long-term care option. True or false, Medicare pays for everything. And I should just wait until I'm 75 plus to make a decision. So if you'll take a few seconds, write down true or false on that. All right. Every answer to this is false. And we're going to walk through these conversations as we go through here. Many of you had long-term disability whenever you were in the school, and long-term disability at that time insured your paycheck. If something happened to you and you couldn't work, you would receive a percentage of your paycheck. Long-term care provides income for your care in the event that you need it after you've retired, or if you don't have the ability to work, that type of thing. We're going to walk through and talk about these other situations we go through here and kind of show you why these are false. Because studies show that 70% of us, once we reach the age of 65, are going to need some form of extended care in our lifetime. This could be as the result of a fall or an accident, or like my father, after a series of small strokes and his dementia got progressively worse, that my stepmother was no longer able to prepare or take care of him. And so it could be a chronic condition, it could be a short period position, but 70% of us, once we reach age 65, are going to need some sort of extended care at some point. And depends on who pays for that, really can make a difference there. All right, now we had about 50% of the group, or I say 40% of the group, that has some sort of a long-term care plan. So I want to kind of cover the components of a traditional long-term care policy so that you can see kind of how they work together. And I want to do this in the illustration of a good hamburger, because you can have a good ground patty, and if you don't have buns on it, it's not a hamburger. In the long-term care arena, when you have your buns, you're talking about what qualifies you to receive long-term care. So if you've purchased a policy in the past, either from your school or from an individual provider, or you have a policy, this is what your policy probably looks like. You have what are called the qualifications to receive your benefits. These are usually one of two things. One is called an activities of daily living. So if the ability to take a bath, to toilet yourself, to dress yourself, feed yourself, continence or transferring, moving in and out of a bed into a chair to the bathroom and vice versa, things like that. Most policies require you to receive benefits if you lose 2 or 3 activities of daily living. Once you do that, your doctor certifies that you can no longer do these things for yourself, then your policy can trigger. Or in the case of my father, you could have a cognitive impairment such as dementia. And early on in his dementia, he could do all of his activities of daily living, but he was a risk to himself to fall or wander off or hurt himself, things like that. So cognitive impairments like dementia, Alzheimer's, you're diagnosed with one of those, that would automatically trigger your benefits as well. So those are the 2 qualifications. The buns that make the hamburger of a long-term care policy are your qualifications. And then the meat, what really makes the policy, is either a daily benefit amount of $100, $200, $300 or more per day, or a pool of money, say $100,000 or $300,000 that would cover you. And then you've got a length of coverage component in here. So if you've got a daily benefit amount, it could say we're going to cover you for $300 a day for 3 years or 5 years or for your lifetime. And depending upon the length of period of time, it could be more or less expensive. If you have a pool of money, it's going to say you've got this amount of money to use as long as it lasts. If it runs out within a year, that's how long you've got coverage for. If you make it last for 6 years, you've got coverage for that amount of time as well. So understanding your daily benefit amount or pool of money and the length of coverage is very important. When we come back in long-term care 201, you'll be able to see what the average stay in a nursing home versus assisted living facility, things like that. And we'll touch on that just a little bit here in a moment as well. Then you get into what's called an elimination period. And I know many of you are familiar with your homeowner's insurance deductible. It's that amount that when a hailstorm or a tornado blows through that you're going to have to pay before your insurance company pays. The elimination period works just like a deductible in that it's the time that you have to pay out of your pocket for your care until your long-term care plan kicks in. This is highly important. This is why I want you to have Kyle or someone on our Missouri team review your policy if you have one, because many policies, especially those taken out from a school, have a 90 or a 180-day elimination period, which means that before you can receive any type of care or any type of service, you have to wait 3 months or 6 months. That could be a pretty significant amount of money out of your pocket if you need care. So again, I encourage you to review that. Then you start to get on your specialty coverages. And some of these coverages may or may not be in your policy, depending upon how you chose it. They may not have been options, or they could have been options that cost you more. Some traditional long-term care policies just covered you in one location, meaning a nursing home. Some cover you at home, some cover you at an assisted living facility, or some cover you at all 3. So there's options there. We're going to talk about that as well. Some provide inflation protection. And this is the challenge. I'm going to show you in a moment when we talk about the cost in Missouri, what inflation has done to that recently. And especially if you have an old policy, you may have had inflation protection on there and it has kept up with inflation, or you may have declined increasing your policy's inflation protection and to save some money. And now that policy may not be what you think it needs to be. Again, another reason to review that, make sure it's the coverage you expect. And then non-skilled services. This is kind of a new feature. It may or may not be in your policies, but non-skilled services is becoming very popular because most people want to stay at home, but they may just need help for somebody to come around and stay with them so they don't wander off like in my father's situation. So they're not truly a home health nurse. They don't have a license, a nursing skill set with them, but they just need to be there. So just in case that, you don't hurt yourself. Some policies provide for non-skilled services that are cooking, cleaning, light housekeeping, things of that nature. So we're going to address these in more in depth. But again, this kind of gives you a picture of what a long-term care plan looks like. so that you understand as we go through and talk about what one does, you can kind of refer back to that and see this is what happens out there. But really, what is extended care? Extended care can be everything from care in your home to a traditional nursing home facility or a long-term care facility like we're very familiar with, or it could be somewhere in between in this assisted living communities out there. We're going to talk a little bit more about those, but there's so many different options than what there used to be. I remember when my grandparents had to go to a nursing home, my grandfather, that was the only option. There was no home health aide that could come out to him. There was no in-between place that he and my grandmother could live together, but still had some type of care there. It was nursing home or nothing was an option. There's so many more options today, and that really is a good thing because that gives you choice. And choice is really what's important here. And then how people pay for extended care varies across the board. Most people, it will probably be their personal assets. They'll spend down all their nest egg savings that they've had. They may ask for assistance from family and friends, meaning that I want my daughter to come stay with me, or I move in with my son and my daughter-in-law, that type of thing. Or I get somebody from the church to come stay with me periodically, those type of things. So that can be a little bit of a challenge. There could be some cost in there. And then some people talk about going into the Medicaid program. Medicaid and Medicare are totally different. We'll talk a little bit about that. And I'll show you in a moment what Medicaid, how it is to qualify for it. I'll give you some of my tips or some observations that I saw in my father's facility as well. And then others, like 40% of you on the group today, have some sort of extended care coverage. They have taken a step to have somebody else pay for the bigger expense. They're spending a little bit out of their pocket to take care of a bigger expense down the road. And that way they've got control and peace of mind in how they're taken care of. Because as we age, you never know when that next step, we can't do things for ourselves. I've noticed with my mom, she's 81 years old. She'll be turning 82 here in May. She's starting to repeat herself a little bit more. She gets lost in a Walmart parking lot, things like that. And that concerns me. So she's not able to do many things like she used to. We all get to that point as well. And I also saw this in my father's nursing home facility when I'd go visit him. I was in my early 50s whenever I would go visit him. And I noticed people younger than me in the facility. So I'd ask the nurses, hey, what's the situation? And some of it was accidents, car accidents or traumatic falls and brain injuries. Some of it was brain injuries or birth injuries, and their parents have since passed away and there's no one that can take care of them. So you never know when those services are going to be needed. And I'd highly encourage you, if you've been thinking about it or you want to take the Missouri attitude of show me more, this may be the time to kind of sit down with Kyle or someone and just go through any scenario and understand what the scenarios could be and how it could and couldn't work for you. And there are some common myths, as we've talked about earlier when we did the pop quiz. One of the biggest common myths is that healthcare and Medicare are going to cover your long-term care costs. Private health insurance, whether you've got it through your spouse, you still have it from your school, is not designed to cover chronic extended care needs, or really not designed to cover a lot of rehabilitation, even after an injury or a fall. Medicare has certain periods of time that they'll cover. We're going to talk about that in just a moment. But really, when it comes to long-term care, neither one of these programs is designed to provide for long extended care. And then as we discussed, Medicare and Medicaid are not the same thing, because what Medicaid is, and I'll show you shortly, is really designed as a measure of last resort. And then Kyle and I hear this all the time. Well, I'm too young to buy. I should wait. I'm going to show you in a little bit what the cost of waiting could be. And again, I'm so glad my father didn't wait when he was in his 60s playing competitive basketball and never thought this would be an issue. And why I'm glad he didn't, because just a few years later, he had his first little minor stroke, still kept working, but he never would have qualified had he not taken this out before. And this is the most important thing to me, is where those services are provided. You worked all your career to take care of our children, to teach Kyle and I, and we appreciate that. I look at my wife every day when she comes home. She cares more about those kids, I think, than anything in the world. Why would you want to have someone determine where you are taken care of when you need it the most? You want to stay close to home. You want to stay close to the community in which you grow up in, the community in which you're surrounded with. There are so many care facilities now that are centered around fraternal organizations, professional organizations, church, religious organizations as well. Excuse me. And you've got the ability to pick and choose where you want to go. And so some of these could be a community care. They could be assisted living facilities. They could be nursing homes. And so you get to pick where the services are provided. So let's go ahead and look at some of the cost right now. Mutual of Omaha is one of the best providers of long-term care on an individual basis in the country. And they do a survey every year. They release it in April. Excuse me. So we've got a time period coming up when we'll get the newest data. But in 2021, they did a survey and showed the national average for home health aid was about $27 an hour. The assisted living facility was about $4,800 a month, $8,000 a month for a semi-private nursing home room, and over $9,000 a month for a private nursing home room. What shocked me was the 10-year growth rate, the inflation. You can see that almost doubling some of the costs out there. So let's drill this down a little bit closer to Missouri. And I want you to take your pen out and I want you to write down genworth.com, GENWORTH.com. They have a cost of care calculator at the bottom of their homepage that you can go down and you can plug in city, state, zip. You can, look at a general area where you are or where you want to go. Excuse me. And you can plug in and look. And so they haven't updated their numbers for 2022 yet, but you can see out here, we kind of did a cross section across the state from Kansas City over to Jeff City to St. Louis. And you can see for a home health aid in either city, it's pretty expensive. It's $5,000 plus. In Jeff City in the center, a little bit less expensive. Assisted living facilities took a sizable decrease in Jefferson City. So I don't know if that meant more people were facilities came online, or that there were less people that were interested. COVID kind of moved people out of assisted living facilities into their family's home. But you see most everywhere else, the costs are starting to go up. A semi-private room for a nursing home is anywhere from $5,700 to $6,400 across the state. And then a nursing home room is anywhere from $6,000 to $7,500. In Missouri, it's less expensive than other parts of the state. You go just a little bit north and east into Illinois, then especially up into Minnesota, Wisconsin, it can be $3,000 more a month for a semi-private or a private room. So I'd highly encourage you, use that cost of care widget. Let Kyle help you walk around that cost of care and understand what it could be in your area, just to give you a sense of what's out there. And then what we found with COVID is there are less and less people that are able to work in the long-term care industry, whether it's a home health aide, whether it's a nurse in a nursing facility. So the cost to staff these facilities is going up quite a bit as well. Mutual of Omaha gives us statistics every year, and they tell us that on average, the person goes on long-term care claim at age 78. Okay, so again, that's just an average. Some go beforehand, some go afterwards. Overwhelmingly, women go on claim more than men. And this is usually because the man stays at home. The wife says, we're going to take care of you as long as we can. They exhaust all of their financial resources, keeping dad at home. Then the mom is wore out. Once dad passes away, there's no place else to go, and somebody then has to take care of her at that point. In the top three reasons, again, I experienced with my father, dementia, then heart disease, then arthritis are the reasons why someone usually goes on a long-term care claim. And we talked about pay a couple of times. Again, I was so appreciative and so blessed that my father took out a plan for himself, but the money needed was there when he needed it. Sometimes funds, though, are not available when you need them to be. They could be wrapped up in an IRA. They could be used for something else or set aside for a kid or grandkid's college, something like that. Or in the case that we see a lot in Texas, Oklahoma, Missouri, and the Midwest, it could be tied up in family assets, family land, or your home, and you don't have the ability to sell it right away to take care of your long-term care need. And that could mean liquidating an asset, incurring a tax result, a loss or something like that, or income taxes, or a loss in the stock market on money you weren't anticipating to use right away. Then we talk about Medicaid. Medicaid is truly a last resort program for people with limited assets. You have to spend down all your assets to qualify. The state does a look back of 5 to 7 years sometimes and says, hey, were you hiding this with your kids, that type of thing. And then even if you use long-term care and you do qualify, the state will come back after you pass away and try to collect money from your estate, anything like that that they paid out. Here's the one challenge that I also see, especially for retirees who are on a pension. Usually your pension, not that it's a huge pension, it still keeps you above that poverty line to qualify for Medicaid. So you may have heard that, hey, Medicaid is going to cover this, just spend down your assets. I can tell you it's really a difficult challenge to do. What I also see is that when my father's situation, the first facility he was in, they had 3 wings. 2 of those wings were for private payer, where my father was, whether it's long-term care, coming out of their own personal assets, they would have a high patient to staff ratio, lots of services around, lots of rehab services, things like that, a lot of interaction. Then you had a Medicare wing, or excuse me, a Medicaid wing that didn't have the same number of staff on it. Didn't look like an area where I want to put my father or my loved one. So you can make that determination, but I just know it's very difficult for individuals who have a pension to be on Medicaid, because oftentimes they require you to sign your pension over. And many of us can't do that because we still have other expenses to take care of as well. So we talked about Medicare. I want you to grab that pen and write down some numbers for us. I want you to write down the number 3. I want you to write down the number 20. Then I want you to write down the number 100. Medicare will pay for your long-term care in certain situations. It has to be after a 3-day inpatient hospital stay. I want you to write down the word inpatient. And then you must be discharged to a skilled nursing facility where you're getting rehabilitation to get back up on your feet, feed yourself, help yourself go to the bathroom, walk, all that kind of thing like that. If that happens, Medicare is going to pay the 100% for the first 20 days. So as you're getting rehabbed and all back on your feet, Medicare covers the first 20 days. After that, you've got a $200 a day coinsurance clause. Then after 100 days, Medicare stops paying altogether, and then you're responsible at that point. The challenge being is Medicare is changing what qualifies as an inpatient stay all the time. You can stay in a hospital, and I didn't realize this till about 2 years ago. You can stay in a hospital as a result of a surgery, an accident, something like that, for 3 nights, and you're not considered an inpatient. You're considered an observation status or an outpatient status. If for whatever reason you are in an outpatient status, you receive none of those previous Medicare benefits for skilled recovery, like I mentioned. And it's all a medical billing situation. So I'd highly encourage you to understand, when you go into a hospital for a broken hip, a knee replacement surgery, an accident, a fall, something like that, if you are in, you're still going to get the same Medicare quality care, but you may be admitted as an outpatient, and that doesn't qualify you for any of those future long-term care benefits. And then what if you do qualify for Medicare benefits, but then all of a sudden you stop getting better? You have a broken hip and you go into the hospital and they say, okay, you're an inpatient stay. We're going to replace the hip. We're going to repair the hip. You're going to then go to a rehab facility and get taken care of. But then they say, Mrs. Jones, you're not going to be able to walk anymore. You're not going to be able to get dressed by yourself anymore. You're not getting better. At that point, immediately that the facility says you're no longer getting skilled care, because you're chronic, you're not going to get better, Medicare stops paying altogether at that point. And then you've got a decision. How am I going to get cared for? Again, that's where long-term care can pick that up. That solution is long-term care, is a plan that covers you to supplement out of any out-of-pocket expenses. It helps pay for all of your care. It protects those assets that you have, be it for the other spouse to continue to live in the home the way that you want them to, helps you keep connected to things that matter most. Most importantly to me, it gives you control. It gives you control over what you need and how you want to be cared for. One of those is those stay-at-home benefits, is the long-term care plan that gives you household tasks such as cleaning and meal prep, helping with personal tasks like bathing and dressing yourself, a home health nurse to come out there if you want to. Again, that keeps you at home. In my father's situation, in the early days of his dementia, he was still high functioning, but my stepmother worked. She needed to sleep at night. He would get up in the middle of the night and pretend to be an electrician, or he would wander out in the backyard. It got to be where he wasn't safe to himself. So his plan was able to provide for someone just to stay up with him and take care of him. Good long-term care plans can provide for special equipment, chairs, adjustable beds, things like that. If that can keep you at home as opposed to going to a nursing home facility, wouldn't we all want that? Or they can help you modify your home, put a ramp in, widen a door, lower a stovetop, things like that. Lots of good stay-at-home benefits that are out there. And some give you a choice of cash, meaning that the minute you have a claim or a need, boom, the money's there to use how you want to pay for any expense any way that you want to. Others are reimbursement plans, meaning that, like in my father's case, once we got him in a nursing home facility and they found out it was going to be X amount per month, the bill went directly to the long-term care company. They paid the check on a reimbursement basis. So again, very simple in the manner in which it goes out there. So you've got choice in your options to going forward there. Now, Kyle, I hadn't allowed you to talk yet. And I know you and I were talking a little bit earlier today, this week, and you were talking about you have many MRTA members that you talk with on a daily, weekly basis that say, I'm going to wait. What's your answer to those that say, I want to wait, I kind of want to see what's going on, that kind of thing? What's your response to that?
The response is, we honestly don't know what's going to happen tomorrow. I'll just give you an example. I've talked to a couple, helped them out with home health care, both healthy, just fine. And 2 to 3 months later, her husband was given medication that he wasn't supposed to take. And it messed him up pretty bad, gave him some brain damage. And he had to start using home health care. It was just something, it was just an accident. No one did it on purpose, but it's just something that happens very quickly. They're very fortunate to have that home health care to help them out with it. So my response is you just don't know what's going to happen. You don't know what tomorrow brings.
Great. And I hate to hear things like that. It's not uncommon, but it's not, it's not common. But as we age, it gets harder to qualify for plans because we've got a little bit more health history on our side. Could be a small stroke, could be heart issues, things like that. We also have family history issues that crop up there. It's very difficult for me to qualify for a plan because of my father's history of dementia. And so those things happen. So I encourage you, don't wait until you get older because it is a little bit more challenging to qualify for, and it definitely can get more expensive. Don't worry about these premiums on here. This is just an example I pulled up. I just want you to see that the longer you wait, the more expensive it can be and the more it can cost you out there. But there are some other options as well. And there are options out there that can cover you for a shorter period of time. They can cover you for a weekly benefit as opposed to a daily benefit and give you a little bit more control over your money. If you've got a plan out there that has a 90-day or 180-day elimination period, you can get a small plan that covers you from day one so that you've got no money out of your pocket. And then also some that will provide you non-skilled services as opposed to having a skilled worker come out for you or care for you in your home as well. So there's a lot of options that are out there. So I encourage you, to have someone look at it, have Kyle or somebody on his team look at these plans, make sure that they fit what you need. Most importantly, giving you peace of mind for what's out there. So if you've got questions, drop those into Q&A. I'm going to have Kyle give some commentary at the end as well, just on some of his experiences as he's worked with many of your fellow MRTA members. Drop those into Q&A. We'll be glad to answer those for you as we go through there. I want to remind you of a couple of benefits that you have. You've got a passport discount program that is free to you as an MRTA member. I encourage you to sign up if you're not a member already at myambadiscounts.com. You can go out there. There are discounts on everything from vitamins, pet foods, hot deals on tax preparation software right now, the Whirlpool Inside Pass if you're looking for appliances, or you've got wedding showers, you're going to look for those KitchenAid mixers or something really neat for a granddaughter, something like that. Go out there, take a look at what's out there for you. If you want to get out of that cold weather that you're experiencing, head down to Florida and get on a cruise. Right now is the best time to shop for travel for cruises, giving away free gratuities, specialty dining, things like that. Then there's all sorts of rent car savings, technology savings. Go check it out there. Lots of good stuff for you as well that's available for you. We've got some more webinars coming up. One of those will be on the 30th, a spring break passport discount program webinar. We're going to break down how to sign on, what the latest discounts are. We'll take you out there live and kind of let you throw some ideas out there. We'll go see what's out there in discounts for you. Then Kyle and I are going to come back on the 27th of April, and we're going to talk about 201. We're going to talk a little bit more in depth about some statistics, and then we're going to show you some alternatives to long-term care that you may not have thought of, and some ways that if you have some medical history right now, or you have some family history that would prevent you from qualifying, that you may qualify as well. So jump on, sign those things up, and we'll get in there as well. So, all right, Kyle, we've got some folks that want to know how they can get a hold of you, and I'm going to show them how they can get a hold of you right now. All right, there are two ways that you can get a hold of Kyle. You can start first and foremost by taking your smartphone, and you can open up your camera feature on your smartphone, hover over that QR code. That QR code will pull up a little form, and you can check on there, I want a benefit review, or I want to know about long-term care, and put your information in there. It comes back to me. Kyle will get it today, and he can contact you right away. If you're on your smartphone or you're on a tablet and you can't take a picture, or use the scanning feature on your camera, you can simply email me at john.green@amba.info. I'll get it right back to Kyle. Well, he'll take care of you. He's been doing this for a couple of years. So Kyle, tell the group on the call today, when they use that QR code or they hear back from me and say, hey, here's this individual needs some help. How do you contact them? What does a review of their plan look like? What do you go through in that process?
Yeah, so usually I just call just to get an idea of where you're sitting at. And if we need to go a little bit more in depth, I like to set up a time to meet people either in person or over Zoom. That way we can get a little bit more detailed and personal information about what you're looking for, what you want to accomplish. And we can take a look at your current policy. If you have one right now, I think it was like 40% of people do on this call. And we can just take a look and see what you have, see if you even have any gaps. Some people don't. And that's part of the review. We want to make sure that you're covered and that you're not overinsured though. So you're not throwing away some of your hard-earned pension money. Exactly.
Great. And you can do this in a wide variety of ways. So again, use that QR code. We've got some great questions coming in here. One of them this is from Danny, says, can we talk a little bit more about the potential cost of elimination period coverage? Danny, the elimination period coverage, if you remember, we talked about the elimination period is your deductible, so to speak, on a long-term care plan. Sometimes it's 60, 90 is usually more common, 90 days, sometimes 180 days. So say 3 months. A elimination period plan would be a short-term care type plan that could provide 3 months worth of coverage. It could provide a set dollar amount of coverage. In the case of my mother, my brother and I bought a 1-year plan. that allowed her to get, I want to say, somewhere around $1,000 a week if she needed coverage that would cover some of those expenses up until maybe she needed to trigger her long-term care plan. So it just gave us peace of mind that we could maybe get our financial household in order, but some of that money would come in early. And some of these plans can be pretty inexpensive. It's all age-based, some couple of medical questions, things like that. So it's a really simple process. Kyle, you think you could find that out in probably 5-10 minutes, something like that?
Oh yeah, like potential cost of it. Yeah.
Okay.
It's on their information. Yeah, it shouldn't take long to get a cost on that.
Okay, super. Again, so use that QR code and Kyle can work it because it is individual based on rates and sex and things like that. We have another question that came in. This is two phenomenal questions that have come in. I'm going to field the first one, and then Kyle, I want you to take the second one here in a moment. The first one is, do you recommend a life insurance policy with a long-term care rider versus a long-term care plan? That is a great question. There are some, and we're going to touch on this in long-term care 201 in April, but there are some life insurance plans that have long-term care riders in them that say we will give you up to 50% or a certain dollar amount of your policy. So say you have a $200,000 death benefit on your life insurance policy. That $200,000 death benefit, if you passed away, they're going to pay the $200,000. Or if you need long-term care, they'll say you can receive up to 50% or up to a certain dollar amount for long-term care. One thing which is a nice feature, usually they're free as part of the policy. Sometimes they may have a little bit of a cost depending on the company. Usually they're free. What usually you need to look at very closely is, does that provision only provide for nursing home coverage? Meaning that they will only give you coverage if you get confined in a nursing home, not at your house, not an assisted living facility or something like that. That's usually the biggest thing that's out there. That's why I encourage you, use that QR code, let Kyle review that plan, that coverage, because what sounds really good, and I've got a life insurance plan that has that benefit in it, that rider, but when I did some fine tooth digging into it, it is truly just for nursing home confinement, not for care at home, something like that. Now, Kyle, the other question we've got out here, and these are kind of two of them. If you take on a long-term care plan, does the rate go up as you age?
It can potentially. So it just depends on what's happening as far as the dynamic of long-term care and the cost of care. And the insurance company can potentially do that. It's not guaranteed that they will. But they do give you some options to help out with that. Either you take a reduced benefit amount and keep your payment the same, or you can keep the same benefit amount that you're insured for the length of time, keep your policy the exact same, and a little bit more for that. But there will be options that provide for you. The answer is maybe. It's not a straightforward answer on that, unfortunately, because we just don't know what's going to happen 10, 20 years from now, what the dynamic of long-term care is going to look like.
Exactly. I said, that's a great question. Most policies are sold with the expectation that they're going to remain level for a long period of time. In 201, we're going to show you what's happened over the past several years. And as Kyle alluded to, you do have options. That's the one nice thing, the way that the state departments of insurance protect you is they build in and require companies to build in options if they do have to take a rate increase. And then we had another question that talked about rough estimate of how much long-term care policies cost. As you saw with that hamburger, and if you go to a good hamburger place, you know that hamburgers vary across the board based on toppings, based on benefits in the long-term care case, based on your age, medical history. They can be as little as a couple $100 a month. They can be quite expensive depending upon what you get. That's why MRTA has several options out there for you. So to say one size fits all, fortunately, MRTA and AMBA have partnered with some of the best companies to provide you with a wide variety of options that fit your need. And so that's why I encourage you to use that QR code. Email me at john.green@amba.info. Kyle can get back with you right away and help you understand what that would be. Kyle, talk real briefly about a true long-term care application process? Because it's a little bit different than what most other policies are. Just briefly share what that looks like.
Yeah, so the first thing is, excuse me, you put in paperwork to these insurance companies. 'Cause unfortunately, you can't just purchase them. You have to qualify for it. So they ask health questions, and they want to look at your health history, and they want to know potentially what your family's health history is. And so they'll make a determination on if you can qualify for it or not. It could be a really quick turnaround time, or it could take several months to get that going. I just know that I've worked with people before, and they might have had something in their medical records that is incorrect, and that takes a long time to get fixed, because then now you need notes from doctors and various other places. So the process can be really quick, within a week, or it could take several months. But the process is definitely put in paperwork and finding out what the insurance company says first, and then we kind of pivot from there if we need to.
And then there are policies that are shorter periods of time, and they have less qualifications. It could be done right there on the spot. So, and then we had one last question here, and I appreciate this. This is a good question. Can they cancel your coverage later if you have a health issue once you're insured?
No. Once you're qualified and they insured you, you are insured.
So, like I said, it gives you peace of mind. Again, that's what really long-term care does. Kyle and I have been doing this in various lengths of time, and the peace of mind is the most important thing. Knowing that with my father, he was going to be taken care of in the manner he deserved and the dignity he deserved. And it was not going to put a financial pressure on my stepmother or my kids, his grandkids, that type of thing as well. So we had one last question. I'm going to wrap this up here. Do you represent insurance companies? Yes, we do. And do you give recommendations? That is, depending upon your situation, the type of plan you're looking for. What AMBA does, Association Member Benefits Advisors, we partner with MRTA to provide supplemental benefits for members of the association. Our role is to make sure that we vet the strongest, the best companies for their members, to make sure that you as an MRTA member are protected by the strongest companies that have the best claims service, that give the best customer service, that are designed to protect you the best for you. So Kyle can sit down with you and show you if there are options with other companies and what's available to you, and then show you how each one of them would work. So I highly encourage you, use that QR code, email us at john.green@eba.info, and we'll get you back real quickly with Kyle and get every answer with you. I highly encourage you, Kyle. Do you recommend both spouses be together to talk about this, bringing in maybe sons or daughters? What's your thought process in this?
Yes, I would recommend definitely a spouse. I'm not married, but I've heard enough that you don't want to make a decision without your spouse around. So and the other thing for that is that they may think of questions to ask that you don't think of. And I want to make sure both of you are well informed and feel comfortable going forward with something before you do. And as far as like family members go, yeah, if you absolutely have a child that you trust and you want their input on that, invite them along. I'll answer any questions they have, and I'll help them understand it as well. So I would definitely, the more the merrier. If you want to invite 15 people from your family, I'll talk to all 15 of them.
And I will say from the standpoint of having family members involved, it's better to have that discussion now than after, whenever it's like, all right, who's going to take care of mom? And you're sitting around with your brothers and sisters and saying, how are we going to do this? Better to have that discussion now. One last question, and we do have to run here. Are premiums for long-term care deductible? I'm going to use kind of Kyle's phrase. It depends. Maybe they could be deductible depending upon your tax situation, depending upon what monies you pay for it with. If you have a health savings account, you can use that money in a health savings account to pay pre-tax dollars for a qualified long-term care plan. We're going to talk a little bit more about that in 201. So Marcia, I appreciate you being our straight person to give us a lead in for our 201 session. But some plans and the way that the government has set this up, because they see this as a big problem in the long run, is that certain true qualified long-term care plans can be deductible, either the premiums or the payouts are not taxed. So there's some tax treatments on either side. Again, Kyle and I are not tax experts, and you need to consult with your professional on that, but that's a great question, and they can be. So everyone, thank you very much for joining us today. Kyle, thank you as always for being a phenomenal resource, and we'll be back on 201. I'll leave this up for just a couple of minutes, and that way you can use that QR code if you need to, but if not, have a tremendous rest of your day and week. Stay warm up there, and take care. And Kyle, again, appreciate you. Have a good one.